All right, folks. So I wanted to take the time today to just kind of show you the portfolio. The last time I showed this, I want to say the portfolio value was at like 13,000. I could be wrong about that. It could have been more or less, but I think it was 13,000. So if that's the case, we are at double. We were at the last time. I'll be honest, I do not remember when I uploaded that last video. I know it's been a while. It's been over a year, um, and in that time, the portfolio has doubled. Most of that is due to my contributions and not necessarily like market gains. A good bit has been for sure, but a lot of contributions. So portfolio value sitting at 26,700. As we can see here, net cash flow of 19,700, and I would just call it 785. That gives us market gains of nearly 7,000. We're over 7,000 if you include dividends. So while the portfolio has gone up double since the last video, most of it is just me depositing money into the account. If we go to funding, we can kind of see my history. 2024. Last year, we're halfway through 2025 now. I added quite a bit in 2024. I'm not sure if I'm going to be able to add the same amount into the portfolio in 2025 as I did last year, mainly because I don't have that cash on me right now, and I don't have cash flow at the moment, being that I'm a college student and I'm not working. If I do end up running into a few $1,000s extra, then it will be making its way into the portfolio, and I will show you guys that. But right now, this has been the cash flow into the portfolio as of this year. We're starting August soon. It's July 29th. Oh my goodness. All right, more than halfway through the year. Excuse me. Speaking of year to date, we currently have a 9.24% money weighted return year to date. That is currently outpacing the S&P 500, which is my set benchmark for this portfolio. Now, we're not outperforming by much. If I believe I just looked a second ago, SPY is currently up 8.66% year to date. So we're only up on that by about 0.6%, which I kind of consider that to be in line. If I'm within, really like within a percent above or below of the S&P 500 year to date, I kind of just consider that to be in line. I guess if you average like a 1% over the index each year, and you compound that over like, I don't know, a 30-year time span, it's a very significant amount. Or if you trail by 1% over that same amount of time, it's a very significant amount. So you would think that, being above or below 1% isn't necessarily in line, but my goal is to outperform by more than 1% per year. So right now, I guess you could say performance has been disappointing. I mean, good, but not quite to the level that I would like for it to be. So that's what we're looking at for year-to-date performance. We can go ahead and jump into the actual portfolio. There's only two main sectors in here, tech and financials. Very heavy tech, 87% of the portfolio versus almost 13% for the financials. I'll go ahead and show the financials because both of these positions in here are the smallest in the portfolio. They're not as impactful. So MasterCard right here being the smallest holding in the entire portfolio, $1,500. I'm not sure how much of the portfolio that makes up. Okay, I just did the math. It's roughly 5.69% of the portfolio is MasterCard, this position right here. It's done fine over the time that I've had it. I can't remember when I first initially bought it. I do want to say it was beginning of 2023, so it's been about 2.5 years that I've held MasterCard, and just by the return alone, it's done well. The total gain, like the actual dollar amount, is not significant because the initial buy wasn't significant. But great returns from MasterCard here. And then very similar, S&P Global. It's the second smallest position in the portfolio, just a bit above MasterCard. S&P Global is about 6.92 4% of the portfolio. Similar gains, similar dollar values. I invested just a tiny bit more in S&P Global, but these are very similar positions here. Like I said, smallest in the portfolio. While I love these two companies, they're both long-term compounders, very high quality. I predict them to do very well 5, 10, even 15 years out. If I did find a better opportunity in either another company that I don't own that I really want to, or even a company that I already do own a little bit higher in the portfolio, if I felt that I found a better opportunity there, I could see myself taking capital from these positions to put it into those other opportunities, especially with me being low on cash. Now, I really do want to stick to the portfolio thesis of buying good companies and holding on to them. But with these companies being as small weighting in the portfolio as they are, I feel like it makes more sense to sell them and apply them to other positions, because even if I do get a market beating return out of these positions over a long period of time, like I expect I will, it's not going to have the overall impact on the portfolio that ultimately that I would like, and that putting this capital into other positions I already own that are bigger would have. Now we can go ahead and move into tech, the nice big chunky juicy part of the portfolio. We'll start off with the smallest holding here, ASML. ASML I bought sometime this year. I don't remember the exact day I bought it. We can actually go ahead and look. I might as well for ultimate transparency. ASML. The initial buy was in January of this year, and it looks like I bought in April during the big dip, and yeah, so a lot of the initial buy was in January. Go back here and look at ASML. It's done decently well. 11.5% return, about $200 in gains. Next, we can go ahead and talk about AMD. Currently $2,500 in the portfolio, $435 in gains. This is actually the newest holding in the portfolio. I bought this, if we go back to our activity, AMD. Is it going to pop up? There we go. Yeah, so I just bought this in June, and it is currently the end of July. So I've only held this for a month and a half, and we are already up 40% on AMD. Absolutely incredible. I am a little bit disappointed in myself for not making my initial buy in AMD at the April lows. If I did, I would be up more than 100%, I believe. And I even remember looking at AMD while it was at its April lows and thinking, wow, this seems like extreme value. However, I did not buy at the time, and that's simply because I didn't know what I know now at that time. And so yes, I missed out on some of those gains, but at least the buy I made was a confident one and not one that I was going into blindly. So this could be way more, but I'm very happy with where it's at. Only holding it for a month and a half, and it's already got more gains than ASML, which I've been holding for a longer time. Similar to Meta, which I've been holding for just a little bit longer. We'll get to Meta in a second. But these gains in a month and a half, incredible. I will take it. All right, moving on, we have Netflix, $3,271 in the portfolio. That makes Netflix a 12.25% holding. Now we're kind of getting a little higher up. We're getting into the double-digit holdings. 64% return with $750 in gains. This actually was much higher. It was just over $1,000 in gains, but Netflix has been pulling back a little bit after their, I believe it was Q2 earnings. I don't know what their fiscal year is exactly. So I think it was Q2, which was actually a good earnings report, but sometimes the market doesn't make as much sense as you would like for it to. So Netflix has come down a little bit, which is fine. Netflix is at a pretty premium valuation, I guess you could say. So it coming down a bit. I don't want to necessarily say it's justified, because I don't think the earnings justified it coming down. But the price correcting or reverting to the mean a little bit is fine. Especially with how well I've already done with this. I believe my initial buy in Netflix was summertime 2024. So it's been a little bit over a year. I have added a little bit more within the past few months, but I do believe a majority of the buys were in summer of 2024. So these are great gains for that time. I'm very happy with the position. I'm going to continue to hold on to it because Netflix has a lot further to go. Moving on, we got Meta, about $4,427, 14% return, about $488 in gains. Meta is also a fairly new holding in the portfolio, another one I have added this year. We can go ahead and look at what the initial buy was. I don't remember when it was. I know it was sometime this year. Initial buy, I've done quite a lot of buys of Meta, goodness. February, bought about $1,700 at the end of February. Was adding onto it incrementally throughout March. We hit some April lows and we added a little bit more. I didn't add as much as I would have liked to, and that's just because I didn't have cash at the time and I was actually having to take money from other positions, companies that are no longer in the portfolio. So I actually couldn't add on to this as heavy as I wanted to. That is nearly 16.6% of the portfolio. So for me, making Meta this concentrated of a position in that short amount of time, I think is really telling of how I feel about the company. Now we can move on to Google. $5,000 position in the portfolio. That puts it at almost exactly 19%. That's really cool to see. So about 42.5% gains. It's $823 dollar value in gains. Google, I believe, is also a company I bought in 2024. I don't remember when the initial buy was. There's been quite a lot of buys. We can go ahead and look at Google. My initial buy looks like February 2024. It's actually earlier than I thought it was. I thought I bought it in like summer of 2024. So this position has been in the portfolio for about a year and a half, and we are looking at, let me pull Google back up. We're looking at $823 in gains. That makes it the second highest performer in the portfolio. I think it's time that we move on to the biggest position in the portfolio, Amazon. $5,845. We got 137% return on Amazon. That is $1,382. The biggest gainer in the portfolio and the company that I am most bullish on. If I had to rank the companies that I was most bullish on, I think I would go Amazon 1, AMD 2, and Google 3. Honestly, you could even flip 2 and 3, but number 1 is clearly Amazon. I love this company. I know you shouldn't be emotional about companies, and I don't think I am. But I do have an immense appreciation for this company and what they've been able to achieve. This is a company that I could personally see being one of the first, if not one of the first few, to reach a $10 trillion valuation. I think Amazon's free cash flow and earnings coming up in the future are absolutely gonna explode. Free cash flow is coming down a little bit, and that's easy, especially when you factor in stock-based compensation. It is non-existent. And again, that's easily explainable by increased CapEx spend. Amazon is spending more in CapEx than almost any other big tech company. $93 billion in the trailing 12 months. And I believe for 2025, they announced that it would be over $100 billion for the full year. So that's just going to continue to increase. We'll continue to see it affect free cash flow, but quite honestly, I don't care. As long as this top line continues to grow, that will eventually equate in profits once the CapEx spend goes down and once they actually start focusing on their bottom line. Amazon is not a company that is trying to generate profit right now. They're simply not. If you look at their strategy, you can tell that they're just trying to grow this top line and that they'll focus on profits and returning money to shareholders at a later date. But right now, they're full speed ahead growing this company. I'm very, very happy with it. So guys, that is the portfolio. I hope you guys enjoyed this little overview, just kind of getting to look at everything I got going on. If you love my holdings, please let me know in the comments. If you hate my holdings, please let me know in the comments. Your comment might get deleted, but I guess we'll have to see what happens. I plan on making plenty more videos coming up here in the future in the next few weeks, over the next few months. So if you're not subscribed, please subscribe, hit the like button, and keep checking back for more. I plan on getting into more company-specific videos, and if you guys have any other suggestions for me to make videos on, please let me know. But again, thank you so much for watching. I will see you guys next time.